Good morning, everyone. Welcome to the morning kappa at 8 on a Wednesday. We are here to present the midweek futures traders technical brief, and we are on week 1, November 2025. We are on a new month, and basically there has been some interesting movements in markets, and we're going to go through some of it here. So we have got the most popular futures products traded by traders on this table. And we notice that the indices have been moving well, especially the US indices, whereby from a neutral position in week 4, it has all moved into a positive setup in the month of first week November. So of course we saw some big corrections that happened last evening, but generally the positive setup is still intact, and whatever movements we have seen thus far is actually a pullback at the moment, and there will be some support levels that we will be observing, to identify whether this trend will continue in the coming days and weeks ahead. So for palm oil, we have seen the trend from neutral, maintaining neutral, but of course, yesterday too, we have seen that prices have been sold down. Developments over on the agriculture side for CME products, we notice corn has turned from neutral to positive, and soybean oil and soybean has maintained a negative and positive situation. Gold, silver, copper is neutral after the correction that we have noticed, and crude oil basically still in a range-bound situation, looking for some movements in the days and weeks ahead. So moving on, as I mentioned, this is the palm oil chart, and the sell down is mainly due to the fact that buying has actually dried up, and mentioned a couple of times too, after the Indian festival Diwali, buying has slowed down quite a bit from India. So the sell down is much closer to the 4,000 per ton level, and there may be a bit more downside before some support emerges, probably around the 3,007, 3,008 level for palm oil. So micro Nasdaq was one of the market guide posting that we did yesterday, and what has happened is that basically since the beginning of November, Nasdaq has been trading higher, and what has been driving markets are basically the artificial intelligence related deals, which has driven much of the gain, even as the Federal Reserve near-term monetary policy grew increasingly foggy due to scarcity of official US economic data. President Donald Trump also said that the AI chip makers' most advanced microchips will be reserved for US companies and will keep China and other countries out from the supply. So this is one of the calls made yesterday, which is now completed. This is the Nasdaq futures. The reference price which we were looking at yesterday was 25725, and the potential profit has now turned to reality, 25550, giving us a value of $350. So this has been completed as of yesterday. So I also want to now go into the US weather, especially the temperatures in the US region. From the chart here, we notice that a lot of the temperatures are a bit more moderate as compared to last week's outlook. And for the reason last week, because of the outlook of cooler weather, there was one product that we mentioned was natural gas, and that has actually shot up quite a bit. So this is the comparison between the chart from last week and from yesterday. So what I'm intending to show here is that we're not going to make a call on this one because the stock levels for natural gas is on the high end, and the current spike up is due to the temperatures that we have anticipated to be colder, right? But looking at the current temperatures, it's hot. So coming into the end of the year, naturally we are going into the winter months, so that will affect prices, because more heating requirement is required. We are now moving into the micro crude oil. Basically, it has been trading on a neutral position for the past 2 weeks. And basically, also the prices have been impacted by OPEC's decision to pause production increases for the first quarter of next year. And this marks the group's first pause since it started unwinding production cuts in April, and might also an acknowledgement of oversupply, according to some market watchers. And I think this is one of the factors that has been holding up the movement of markets, because it has not really developed into a full-blown situation. But for this market guide, we are looking at a negative setup. This was actually posted yesterday, and the reference price was at 60.44, and the potential profit price that we are looking at will be the USD 184. But of course, if we look at the current price as of this morning, is 60.32. So there's a slight floating profit as compared to yesterday. And if all this don't work out well, and crude oil prices should actually shoot up on factors yet to be known, the cut loss would be at 62.60, which will give us a USD of 216 of loss. So the other product that we are looking at today will be gold. Gold has corrected for the past 3 over weeks from their high. And also, to me, this has gotten to be a bit more interesting, whether this big mega trend of gold will continue or not. And I think for about a 4 weeks correction, I do feel that we are at some comfort level. So therefore, I am promoting this. And for factors that is driving gold, basically is the Federal Reserve Chairman has said that another rate reduction before the end of the year is not a foregone conclusion, bringing bets on December for rates to be lower. So the situation is further complicated by, of course, I think it's very well spoken about that key data is not available due to the US government shutdown. And gold right now also looking at China, because Beijing has gotten rid of a long-standing tax incentive for some of the retailers. So for gold, due to the correction phase that we have observed, now I'm looking at a short-term setup for gold. Current price is at 3947. So the reference price is at 4025. I'm looking for a possible rebound to 4125, which will give us a USD of 1,000. And if this goes wrong, then the cut loss will be below the 3925, giving us a USD 1,000 US dollar loss. So that's all I have today. I'll pass on to the next speaker. Over to you, Joseph.
All right. Morning, everyone. Thank you, Vincent, on the weekly futures short-term trade. So looking at the Hang Seng Index, I can see that for the past 1 week, Hang Seng Index have show the price actions is rather weak, especially after the meeting between the Trump and Xi Jinping. So, however, we still keep a bullish bias on the Hang Seng Index with our stop loss point at 25,000 point level. Looking at the one of the functions that TradingView gave us, which is a stock heat map. I think this is a free versions that you can get it online. And I have two settings here. Firstly, I look at the price volume for the past 1 week and also the performance over the week. So what I want to do is I look out for the stock that have a high turnover. Volume is one of the key considerations. And then I want to look at their price performance over the week. So you can see that most of the volume have gone into the 9988 as the 9988, which is Alibaba, have the largest box over here. The size of the box is the number of money that have traded in this counter, which is the volume times price, i.e. the money that have traded. So last week, top trader stocks, Alibaba, followed by 700, Tencent, and then thirdly is the SMIC. You can see that these three heavyweight counters delivered negative returns over the week, and they have dragged the Hang Seng Index lower. Now, despite that, look at the box. Most of the box are in the red colors. We do see some of the green color boxes, especially the banks and some of the consumer stocks. So you can see that during the market downturn, right, investor turns to choose banks as a defensive stocks, as we easy to understand that banks does give dividends consistently over the years. So that's how the Hong Kong traders, they choose on their portfolio. When the market is bullish, they go for the high beta stocks, especially the tech stocks. But when the market is bearish, going for corrections, they will seek shelter in the bank sectors. Okay. Right. As for the trading stock this morning, firstly we'll be looking at the Tingy Cayman Island 322, which in Chinese is called Kang Shi Fu. So the stock have a break past 11 Hong Kong dollar and right now heading towards 11.80. Higher resistance will be 12 Hong Kong dollar 50 cents. Downside support is 10 Hong Kong dollar 50 cents. And secondly, we have Media Group. I think most of us are familiar with Media. If a breakout happen on 85, it will climb toward 87 and followed by 90, and downside support is 82. So you can see that the thingy have charted a fresh bullish candlestick on the back of high volume. Same goes to Media Group, also bullish candlestick on the back of high volume. These two stocks are under the Hang Seng Index member. Then on the S&P 500 for the past 1 week, we do see after hitting the 6850 resistance, the stock now pull back for corrections. So I think over the US, two things that market will be looking at right now. Firstly, which is today, New York City, they are going to choose their mayor, right? That has nothing to do with the macro economics, but you look at Trump, social media, he has openly shown his support to the another candidate, which is Kumo, and also interestingly, Elon Musk also at the X posting, he has also shown his support to Kumo, right? And so both Trump and Elon have on their social media have openly asking their voters to do vote on the Kumo, but we do know that Mambani right now is leading the vote. So I think sentiment-wise, market is actually waiting for the results of this New York City mayor. And secondly, will be the November, the Supreme Court hearing on the debates on the Trump tariff, right? So I think these two events will swing the sentiment in the market. Meanwhile, looking for the S&P 500 for the past 1 week, right? Nvidia still deliver a positive return together with Amazon, which officially have a partner with the OpenAI and another healthcare company, right? Which is LLY and Eli Lilly have actually give a 10% return over the week. So I think that the overall market do undergoing a corrections now. We just have to look at whether S&P can stay above the 20 days and 50 days moving average and how they perform in the month of November. I think that once things have set, when the dust is settled, right, funds or traders will be reassess looking at the tech stocks again, as we can see that during this earnings season, banks, tech stock have both delivered very strong earnings so far, together with guidance as well. Right, and as for Malaysian market, we are undergoing a sideways consolidation mode, trading between 1635 and 1570. So keep our stop loss unchanged at 1535. As long as stay above the 1535, we will stay on the bullish bias. And FCPO have underwent a very steep correction for the past 2 weeks. Market concern is that CPO will have a very high productions number until the end of the year. And based on yesterday, the survey that done by Bloomberg and Reuters, we do see that the stock level have actually moved upwards. And so far, the export number did not pick up as what we had expected. And but yesterday, one of the news saying that the one of the biggest plantations in Malaysia, they actually give an idea is that market should look at La Nina, where if the La Nina effect kicks in, that will actually affect on the productions. And the next 3 months, CPO is going to go for the low cycle after the production pick up. Whether market will affected by the bullish or the bearish news, we'll just look at the chart. And right now, what I do see is that the FCPO is trading below the 200 and 250 moving average, and so far the candlestick did not show a meaningful reversal pattern yet, with a very strong resistance at 4003 and 4004. So for the next 5 days, which is coming on the 10th of November, market is going to have the MPOB data, and then on, let's see how the FCPO move for the next 5 trading days. And right now we keep our stop loss at 4004, and we keep a bearish bias on the FCPO. Looking at the market again, Malaysia for the last 1 week, all right, you can see that it's a mixture of green and red boxes, all right. If we look at the market, right, DUFU and DNEX have actually outperformed the peers, with the banks show resiliency over the week. Now, one thing that important is that last week we had the month-end closing. That's why you see on a Friday, right, market have a very strong corrections. But coming to this Monday and Tuesday, I can see that the big cap right now are rather stable, right? And yesterday the banks attempt to actually lead the market to move on a higher. And apart from the tech like DUFU and DNEX, we do see that the market also move the funds into the plantations related counters. So you look at the WTK, TSH, both have actually give a very strong return over the week. And over here, we do see that United Plantation also give at least 1% return, right? And so I think that the market still tends to move on to the defensive sector, and also the laggards such as the plantation. So the movement of the CPO price will give a very important, I would say that sentiment on the plantations counter. So you can actually pay attention to some of the plantations sector. And over here, we do see the Westport also have positive return as well. Afterwards, John is going to give presentations on the Westport. So on the technical trading stocks this morning, we'll be looking at Wasco, which have break past the 88 cents resistance. Next resistance for Wasco will be at 93, and followed by 98. Townsend support is at 83. Then on Rich 10, it had went through a series of corrections. Yesterday, we have printed a bullish candlestick, climb above the 45 cents. So based on this reversal pattern, Rich 10 is going to challenge or test 47 cents and half, followed by 50 cents. Downside support is 42 cents and half. So we have two counter trend rebound stocks, Wasco and followed by Rich 10. So I stop here and pass on the stage to John on the Westport.
you, Joseph. Let me move on to a result review note on Westport. This is their 9 months result note. We keep a neutral call with an unchanged target price of 5 ringgit and 14 cents. Year to date, their operational revenue stood at 1.9 billion, which was up 12% year-on-year, thanks to a high restore requirements, mainly from the repositioning of empty containers back to the Far East. In tandem with the higher revenue, year-to-date core earnings was recorded at approximately 730 million, which was up 14.3% year-on-year as a result of stronger volume and a 15% tariff adjustment that went effective since July this year. Overall, the results were in line with our and consensus full-year estimate at 76% and 77%. Now, if we look at the volume, year-to-date containers volume is around 8.4 million TEUs, which was up 4.2% year-on-year, mainly driven by a 7.8% year-on-year increase in their transshipment volumes, while gateway volumes remain flat this year-on-year. This is within our expectation at 77% as well. Geographically, intra-Asia trade remains the largest contributor, which is around 62% of total container volumes, despite a 3.2% year-on-year drop because of earlier year port congestion and a service realignment as shipping lines reallocated their capacity to capture a more profitable front-loading opportunities in the first half of this year. Moving forward, we expect the global container demand and major consuming economies remain resilient despite several external headwinds, such as potential US government shutdown and the lag effect of recent trade tariff changes. Overall, Westport still maintains its conservative guidance of low to mid-single-digit container volume growth for this year. And last but not least, valuation-wise, we maintain our earnings and container growth forecast with our TP remains unchanged at 5.14 ringgit. We keep our neutral call, and Westport is now trading at an implied PE of 17 times, which is about +1 standard deviation from its historical PE. And then I'll continue with another company update from TASCO following their result briefing yesterday. We keep a buy call with a new target price of 70 cents from 75 cents. To recap the second quarter result, it came in below expectations, mainly due to a higher than expected effective tax rate ETR of 23.5% versus 18% in the first quarter. This was primarily because the first quarter ETR of the cold chain segment was understated and subsequently adjusted in the second quarter. Going forward, management expect a normalized annual ETR of around 20 to 21%. To follow up on our previous result note, we mentioned that TASCO volume down because they have lost some key customers. This is because they are now focusing on higher margin businesses. For example, like air freight forwarding, top line down 61% year-on-year in the first half, but we see PBT up 18% year-on-year. Similarly, the contract logistics segment recorded a 22% year-on-year rise in the revenue, while PBT nearly doubled following the cessation of a low-margin solar panel customer. And also, the group continues to diversify its customer base with several new wins across segments, like a new F&B customer in core supply chain, a regional semiconductor hub in Penang, which is set to commence operations in July next year, and a new fashion customer for its logistics center, which began operations since last month, October 2025. Back to the ETR, TASCO now has an unutilized tax credits of approximately 33.4 million available for use over the next 8 years. Benefiting from their IRS tax incentive, the group expects to record a lower than statutory ETR, providing cushion to the bottom line. Valuation-wise, we trim out earnings by 6%, 8%, and 7% for the next 3 forecast years to factor in a normalized ETR. Consequently, our TP is revised to 70 cents from 75. Currently, valuation implies a forward PE of 8.3 times, still below its 5-year means of 9.4 times. Overall, while TASCO's second quarter result was affected by a one-off tax adjustment, earnings should normalize in the coming quarters, and we believe the group's strategy shift away from low-margin businesses and the onboarding of new customers across key segments should support their margin improvement. That's all from my side and my team. Happy trading today. I'll see you again tomorrow. Monica, bye.